Sanjay Nayar, CEO and Country Head with KKR India. Sanjay, good morning and thank you for joining us. What should we start with, GST, macro or the global big picture? I'll give the options.
I think they all fit together pretty well in the Indian context. My view is that globally there are pretty distinct signs. I mean, you got the US producing strong job numbers, but a weak GDP. I think September move is going to be quite critical to see what they do. UK you already saw, all-time low. And I think in the context, India stands out as obviously an oasis of macroeconomic stability. But obviously we got to figure out where we go from, 7.5%, how do you get to 8.5% and 9%? I think that's the big discussion to have, which is how do you get the big structural reforms under the belt? And GST is a good start, but there's a lot more to go.
A very simplified argument is that interest rates will remain low, central banks will print more money, trillions of dollars is lying in assets which don't offer you return. The estimate is 10 trillion, 12 trillion, 13 trillion. I don't know how many trillions are there, but we know money is parked in assets which don't give you return, and that money will come to emerging markets. Now, it's a very simple argument, and life is not that simple, I'm sure.
Yeah, it's not. So I think that when you have such easy money, obviously asset inflation is one thing, not asset creation. I think what we need in India is asset creation. And I think that is the most critical thing. If you just look at what's happening in India today, consumption has picked up. I mean, we are seeing clear green shoots in consumption, thanks to the urban push that's happened recently with the pay commission, thanks to better monsoon, thanks to the farmer, thanks to, but of course, they're all carrying a lot of debt. But consumption has picked up, but the investment spending hasn't picked up. So if you just have a consumption thing, it's going to be pretty intermittent and quite temporary. You need the investment cycle to pick up, for which you need long-term funds. And you don't need this, short-term money coming in and going out. You need long-term, long-duration capital. So just having a lot of surplus money overseas and search for yield or search for government bond yields, net of forward cost, is one kind of money. FI money coming in, driving the markets up and down is another kind of money. And obviously, long-term FDI is the best kind of money. No, whether it's all or it's even domestic savings. I mean, long-term domestic savings or foreign savings. Long-term savings is what creates the assets, and for that you need, obviously, low inflation for India, and for foreign money you need a better environment to do business.
So what you're saying that's playing out in our money markets right now with regards to the yields coming off, you're saying that's a short-term phenomenon?
Yeah, I think the yields are getting to an all-time kind of low, because the banks are obviously going to have pretty handsome gains on the back of that. But I don't see that spurring demand for credit or demand for asset creation. For that, you need the investment spending and the private sector instincts to come back, to really begin to create assets. We still have a lot of underutilized capacity, right? So is anybody going to go and put up another line of production? I doubt. Forget about another new factory. But we are seeing clearly, at least in our experience, a couple of companies that we have, people are creating, new brownfield capacity. But there's a lot more of that to happen. Otherwise, it doesn't matter where the yields go, frankly.
And what will it take to get that final push coming in?
I think so obviously GST is a great step. I mean, that is topical. GST does remove the fragmentation of the whole sector. It encourages manufacturing. It takes away cascading taxes. All that is great. I don't know. I mean, I don't have a factory per se, but just dealing with the people that we do, it's still a struggle to get a real asset up and running, and the approvals at the state level. It's complicated, and I don't think foreign FDI is still gushing in to really create new assets. The fact that private equity is coming in is a good harbinger of what can happen, because we also represent long-term money. But to bring the real big money and technology, I think there's got to be a lot more reform and ease of bureaucracy at the state level. So I think we're on the right path, but it requires.
But the key is, Sanjay,
a lot of conviction to get this done.
That's not a great Monday morning thought, though, but yeah.
No, it isn't. No, but expert after expert has come in and said that the private sector is not putting up. The government needs to do its first share bit. Yeah. Now, my question to you is, in small ways, the government has done that. Is it happening at a fast enough clip to enable the private sector to start putting up capacities over the course of the next 12 to 18 months, just the beginning, or you think that will be delayed?
Look, I think the government is clearly spending. There's no doubt.
Yes.
Okay, we're seeing that in cement. We're seeing that in steel. We're seeing that in pickup in coal, electricity. I mean, we're seeing the intermediate goods pick up, right? And we're seeing some element of consumption. But to get real investment going, I think you've got to ask the private sector guys about
Yeah,
that.
but will it happen, you think, in the next 12 to 18 months? If the government has done its fair bit. And if it happens, where does it happen?
See, ultimately, I'm a believer that the way it happens in the long run is that you've got to be very prudent about your fiscal size. Until you cut the debt on the monkey's back, the total size, not the percentage, you don't release local savings, okay? Local savings get trapped and preempted by the government. And that's perfectly fine. It's very easy for us to say cut the fisc, but it's not easy to cut the fisc. So I think the more dramatic structural reforms is what will create that environment for people to then again put money to work. If you just think it's going to be consumption-led, you're going to have inflation pretty quick. So you've got to be careful. So you can't just do a consumption-led strategy. So I think government is doing the right thing. They've got at least the percentage of the fisc fixed, and they've begun spending money with all the surplus cash they have. But they will have to cut the absolute amount of fisc, and I think that really comes from divestments and structural reforms, which is, I think, hopefully the next leg of reforms.
Okay, let's talk about what's happening in the PE market. And what I know about KKR globally and locally, you've not really bought into some of these high fancy e-commerce businesses and companies which only offer a business plan on the paper. You've done hardcore investments in Bharti Airtel, Cafe Coffee Day, Dalmia Cement, real businesses. What's going on in this entire e-commerce space from your perspective? I mean, first was the good story, which is the valuation skyrocketed. Now we are hearing the dirty story, the ugly picture that slash downs and markdowns are coming.
Yeah, again, as you rightly said, we don't have much exposure in e-commerce, but I think what we're hearing and listening is that real businesses with real business models that are consumer touching and have a differentiated strategy, I think will make money, because the opportunity in India is huge. I mean, we are very, very difficult to do retail business in a brick and mortar style. So, willy-nilly, these businesses will do well if they are built the right way. If they're just built on just GMVs and discounting strategies and buy anything, anytime, anywhere kind of strategy, is going to be very difficult. I think you just got to have real cash flows and a real path to break even. I think money will definitely go. I think there'll be IPO candidates. There'll be real businesses. And it'll happen because physical retail is just so difficult here. It's such a distributed country. It's so fragmented. Real estate is expensive. I think e-commerce has a real role to play. And on the financial services side, I don't know if you guys read Nandan's recent article. I mean, that's just going to be absolutely disruptive to reach out to this kind of financial inclusion. So if you just take two sectors, retail and financial services, I think those two can be real e-commerce businesses. So I wouldn't write it off at all. I would say people have got to reinvent the business model, take it easy on valuations, build real businesses, have a path to break even, and I think they should be fine.
So is that the disruptive new trend? I mean, you just highlighted to Nandan's article as well. Are these two sectors the it sectors to be in the near term and the near future?
On the e-commerce side? Clearly, I think that's true. And I think all the related derivatives of these, right? So logistics and other things.
We won't get into companies with you, and our compliance doesn't permit you. But when I read the news that you bought into Gland Pharma, my reaction was, why should one buy into the sector where we know the FDA problems are real?
Right, sure.
So do you think the Indian pharma sector still has the natural advantage, or now it's a SAR story given how US FDA clampdown has been?
I think not at all. Actually, when we bought Gland Pharma 2 years ago, with the entrepreneur in India who built it, I think our whole theory was this was a quality conscious company. All our products go to exports, all FDA approved facilities. We helped him increase scale, put up another facility. We increased R&D, we increased the products being sold, and now, as you know, we have signed up with the Chinese firm to buy a combined stake. I think actually FDA may be clamping down, and I think they need to, because obviously there's lots of medicines going to the US market, but I think India is extremely well positioned actually. If you clear the FDA hurdles, and I think they're being quite fair about it, actually it's a huge potential. So I wouldn't write it off at all. And I think one by one, every company is tightening the belt. We've been very fortunate. We had no big failure. But I would say every company is tightening, and you can imagine that bespoke manufacturing like that, with high quality, good design, appropriate cost structure, I think Indian entrepreneurs are very well positioned.
I used to always use the word bespoke for tailoring.
Yeah, I was thinking only a designer suit right now, but yeah.
No, but I think that's really what India's strength is. I don't think we're going to make,
Chinese factories.
Yeah, exactly.
Yeah, you're
So
right.
I think that's the strength. And that make in India, by the way, is going on. So, we talk about it, but there's already lots of it going on.
Yeah, that's true. Now, the other thing, and you've been associated with it's a new term that I've learned about a month and a half ago, diversified financial services. So, all pure play brokerages who now have a diversified financial services model now like to call themselves that, and rightly so. But all I'm saying is it's got the flavor of the market, and rightly so. Their earnings growth have been tremendous. Their commentary has been great. It's in a manner of speaking a new sector emerging, so to say. Do you think that it's a good space to be in for the foreseeable future?
So what are you referring to? Which kind of companies?
I mean,
Not banks.
brokerage-
Not
No,
banks.
I mean, he's
banks.
talking about, let's say, if you bought into an Aventus or
Okay,
the fact
what
that
do
you
you-
bought into
So
Magnus.
yeah, why don't you
It's
just come to
referring
that
your
point straight?
investments.
Exactly. Look, I think the starting thesis is that India is still pretty underpenetrated as it comes to financial services of all kinds. So, there's play in insurance, there's play in banking, there's play in wealth management, all kinds of non-bank financing. So that's the real idea, to build a platform with our 3 founders at Aventus, if that's what you're referring to. And idea is to really help them build an institution that is highly diversified, but it's got to be customer centric. The key is that you've got to have the entrepreneur at the center of this, and then you can do the banking for them, the financing for them, the wealth management. And I think that's what they're building. If you do this the right way without being too asset heavy, and you have the right client centricity, which is advice focused, not just pushing a product, I think that is the key. And if you can get the ROEs to a decent level, I think these can be very, very attractive opportunities. And if you're referring to some of the other existing NBFCs, I think you just have to manage the cost structure, and you've got to manage your ROE. That's the key.
What I'm asking, Sanjay, you probably know all of these very, very well as well. An erstwhile brokerage / investment banking firm now has a housing finance, an ARC, and a few other businesses thrown in. So it's a complete package. Do you think it's a process that will last?
I think having so many different things under one umbrella makes it again a conglomerate.
Yes.
And again, you will have a certain amount of inefficiencies creeping in. And again, you will begin to then, carve them up over time, which we have seen. By the way, we're seeing the whole cycle of deconsolidation going on. So you've got to have one common thread running across, either as the customer or it's a competency.
Okay.
But if you think you have different competencies, different geographies, different customers, at some point in time, you have to again deconsolidate those. And that's not a bad strategy also.
Okay.
People make money out of that.
Yeah.
Good luck on that one. Sanjay, good chatting with you as always. Thanks so much
Thank
that you
you.
could take time out and speak
Thanks,
with
guys.
us today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.